Hello everyone, welcome back to the Audit and Attestation class. In this class, we'll be understanding in detail rest of the 7 subtitles of the Dodd-Frank Act 2010. So this video is in continuation of the part 1 in which we have discussed subtitle A, B and C of the Dodd-Frank Act 2010. So let's dive into for rest of the 7 subtitle of Dodd-Frank Act 2010.
Next one is improvement in asset-backed securitization process. Do you know what is asset-backed securitization process? Any idea what is asset-backed securitization? Does anyone of you deal in banking or financing?
Sir, sir, if there are any bad debts or any non-performing assets of the banks, they will be given to asset-backed securitization companies, then they will recollect the amount from the borrowers.
Yeah. So how many of you have taken like home loan? Have you guys taken any home loan?
Sir, everyone has taken, no doubt.
Right. So that is also an asset-backed security. That home loan is backed up by your respective home, by the bankers, right? So that is a very, like, you can say, simplest example for asset-backed security, in which bank will give you the loan and they take collateral of your assets. It can be your fixed assets, it can be your plant and machinery, it can be your building, it can be your land, it can be your home, or it can be your account receivable, right? It can be your working capital, anything that bank can take as a security, right? And then if in case of default, yes, they can take those respective assets. Like for example, if you have taken a car loan and you have not paid the EMI, then those bank loan agency will take the car in their possession and then they will sold out that car to recover their loan amount, right? So that is called asset-backed securitization. So asset-backed securitization is a fixed income or security collateralization by any type of self-liquidating financial asset, right? SEC must prescribe regulation to retain an economic interest in proportion to the credit risk of those assets. So for example, it has a vital impact on giving the credit rating to those companies whose assets are collateralized in the bank or any other financial institution. So that's the reason it plays a significant role over here. That's the reason Dodd-Frank Act has given the light on that as well. The securitization cannot directly or indirectly hedge or otherwise transfer to the credit risk that is required to be retained. So for example, if the company has given their assets on collateral to any bank and they have taken a loan, so then their credit rating agency need to consider those assets as a collateralized assets when they are giving the rating to those companies. Because like when you are calculating debt to equity ratios or maybe other liquidity ratios or return on assets ratio, then these things plays a vital role, right? Separate asset class should be established. So from the company standpoint of view also, you need to give a separate disclosure. Like for example, in your fixed asset register, you have land, you have building, you have cars, or you have computer. Let's say 4 line item you have, and that, let's say, land and building you have given as a collateral and you have taken the loan against that. So in the notes to accounts, you will be giving the appropriate disclosure that land and building of this much value reported in fixed asset register is being collateral against the respective loans which you have taken. Right? Those kind of disclosures are mandatory. Certain institutes are exempt from these kind of disclosure, which include like credit system, institution, residentials, or multifamily or healthcare product, but they need to give the enhanced disclosure. An issuer must perform the due diligence analysis and disclosure of those underlying assets. Next is accountability and executive compensation. So probably Kush, now you would be in a position to embrace what comes in SOX, and what was not there, that has comes in the Dodd-Frank Act here.
Yes, sir.
To protect the interests of the investor, right? So executive compensation, in last couple of decades, we have seen like executive compensation has increased like anything, right? So they are earning like in billions of dollars. If you see like Sundar Pichai, do you know like how much compensation he has? Any rough idea?
No, sir.
More than $500 billion.
Yeah, and I think that's the reason he said, right, that
Right.
he doesn't want more benefit.
Yeah, do you know like how much Satya Nadella take? Do you know how much Indra Nooyi take? Like these executives who are earning in billions, and they are getting so much funds and supports and monies. So that's how like this Dodd-Frank Act has came, and he has they have given some regulatory environment to the compensation. They are not restricting compensation, but they are giving a regulatory environment. They are bringing those compensation into the regulatory environment, and they have also given certain caps as well. So let's understand what are those. First one is shareholders' approval is required in every 3 years for the executive compensation. So earlier shareholder approval was not required, but in Dodd-Frank Act in 2010, shareholder approval is mandatory. Second is shareholder must be asked to approve executive compensation at the time of approving any arrangement. So for example, if there is change in ownership on account of any acquisition, merger, or for any such reason, right? Then new shareholder need to approve the compensation, right? Next is issuer companies are required to have independent compensation committee. So earlier there was no requirement of compensation committee. Now if you see all the listed company, it is mandatory to have a compensation committee, and that compensation committee must have independent directors. They will be approving the compensation, right? So controlled company are exempt, which is like private companies or maybe companies under the single umbrella. But the public company whose shares are widely spread in the general public are mandatory to have an independent compensation committee in which majority of the, you can say, member should be independent director, right? Next is disclose the relationship between executive compensation and the financial performance. How much you are paying to the executive and how much actually company is performing. So that's also mandatory requirement, right? One side we have seen companies not performing, they are incurring loss year over year, and you are giving like millions and billions of dollars to the executives as a compensation, right? There was a huge mismatch between like company performance. So they required it mandatory to disclose how much compensation period over period you are increasing to the executive and how much financial performance is changing period over period, right? Next is disclose the ratio between CEO compensation and the median of annual compensation paid to the all employees. So how much compensation you are paying to CEO, CFO, and how much is the total compensation you are paying to the company at large. So those ratios are also mandatory disclosure requirement nowadays, right? Develop and implement policy to recover the erroneous awarded incentive. For example, if you have given any compensation to CEO, CFO, or to director erroneously, then you should have clear-cut policy to get the recovery done. Disclose if any member or employee is permitted to purchase financial instrument. So if CEO or CFO has a right to purchase the share, those also need to be given appropriate disclosure. Next is disclose the structure of all incentive-based compensation. So if you have ESOP, if you have share-based compensation plan, so those compensation plan needs to be appropriately disclosed in the financial statement, right? Make sense? Anything need more clarification on executive compensation and accountability? Okay, I hope it's easy and digestible. Next is subtitle F, improvement of management of SEC. So this Dodd-Frank Act not only focus on investor, not only focus on company, not only focus on CPA, they're also focus on Security Exchange Commission as well. Their management, how the SEC management need to work. So that is an additional thing which was nowhere covered in any past laws, right? Security Exchange Commission must submit their annual report to the Congress. So they made it Security Exchange Commission mandatorily to submit their annual report to the Congress, their annual report into the Parliament, right? What is Congress in US? They are lawmaking authority. What are the lawmaking authority? House of Representative and Senate. How we have Rajya Sabha and Lok Sabha in India. What is Senate? What is House of Representative? What is Congress?
Congress is Senate. Sir, as you said, is like a Rajya Sabha and Lok Sabha, they will be submitting the report.
Yes.
For example, how CAG reports to the Parliament.
Yes, absolutely true. And once in every 3 years, the Controller General must submit the report to the Congress regarding the quality of personnel in management by Security Exchange Commission. So they need to the assessment of the quality of the person, their qualification, their experience, their performance as well. So every 3 years, they need to submit those reports as well to the Congress, like how their team members are working. Each year, SEC must publish an internal control assessment. So for Security Exchange Commission, they will ensure the internal controls audit, and they need to submit their internal control assessment also to the Congress, right? Next is Inspector General must maintain hotline for the suggestion. So it's mandatory requirement for SEC to have the hotline in which public at large can give their suggestion. An investor can file their allegation or misconduct, or employee of the SEC also can file their misconduct or allegation or any report of the misconduct they found. So that should be, like you can say, independent person who will be maintaining this hotline. Next is must hire independent consultant to examine the internal operation structure of the SEC, funding of the SEC, and need of comprehensive reforms for the SEC. So they also need to hire independent consultants to do their assessment, right? So these all laws, rules, and regulations are required for the SEC. Next is subtitle G, which is strengthening the corporate governance for the companies. So issuer shareholder can use proxy material to nominate individual to the board of director. That means if you need to appoint any new board of director member, then shareholder need to sign a proxy statement and give the confirmation for appointment of the board of director. Second is issuer must inform investor why the issuer has chosen the same person as the chairman of the board of director and CEO, and why different person serve as a chairman of the board of director or CEO. So in both the case, issuer must need to inform to the investor why they have chosen someone as a CEO and why they have chosen someone as a chairman of the board of director. Why they have chosen same person to be the CEO and the chairman of the board of director. Any such scenario, they need to give the declaration to the investor. Next is municipal security. Municipal advisor must be registered with the SEC. So for in case of municipality, right, they also trade their security in the SEC. They can also trade their security in the SEC, and they have to appoint a security advisor, and that security advisor must be registered with the SEC. Fine collected by the municipality advisor is split between the SEC and municipality board. And SEC must establish an office in the municipality security exchange to administer the rule of the broker and dealer in that municipality. I is PCOB and other matter. PCOB is permitted by Security Exchange Commission to make information related to public company accounting firms available to the Foreign Auditor Oversight Authority. And second last, PCOB may conduct inspection, and the section established Council of the Inspector of the Journal Financial Oversight of the PCOB. Last one is match funding. It provides authority to SEC to collect the transaction fee and assessment to the recovery cost. That means the PCOB do the assessment, and if they found anything wrong, then they can charge the fees as well as fine penalties from the CPAs, right? That will come under the SEC funds through which SEC runs their operation. So this is all about Dodd-Frank Act. Any doubt, anything need more clarification on Dodd-Frank Act 2010 or Investor Protection and Security Reform Act?
I just wanted to check. So we have to like cram all those by subtitles bifurcated.
No.
We just want to have like we should have an understanding. That's it.
Yes,
We should not remember the subtitles as well.
No, not at all. Not required.
Regarding understanding, only after doing the questions, I think you can get some proper understanding. So till then,
Yes,
it will be very confusing.
absolutely true. So Dodd-Frank Act, I have not seen like highly tested in exam, but it's part of your blueprint. So we have covered in detail. But to be very honest, in my exams or in surgeon material and in other AICPA material, I have not seen very much testing. But you can go ahead and do some practice in this.
Sir, it is better to at least just give one reading at least.
Yes. So you should know like what all regulatory environments are available, are there, right? Make sense?
Yes, sir, agree.
Cool. So I think we are good for today. And in next week, we'll be starting with SOX 2002 and PCOB. That is very important one. So it will be starting in next class.
So sir, for like this one, the the assignment that you have given, so this one we will have to go through it, or we will have to learn it by.
No, read through this like notes which I have shared with you. I think those are very much sufficient, so that you have idea what all rules and regulations are there for the SEC, for the CPA firm, and for the company as well, and to the brokers and dealers. So it covers all. Right?
Sir, can you please share PCOB and SOX files so that we can take printout and we can make notes while you're explaining?
Sorry, for the next class you are saying?
Yes, sir.
Yeah, I need to make that. I still need to
Okay, no problem,
yeah.
sir.
So I'll try to send you maybe by Friday, but
Oh, no issues, sir. Even just before the class also, it's fine, sir.
yeah, I'll try to send you like as and when I'm done.
Okay, sir.
Cool.
Thank you.
Okay, let's meet on next Saturday, 10 a.m. and with the SOX 2002, most important topic for accounting as well as your FAR, both. So enjoy rest of your Sunday. Request you to please read through the notes at least and do some practice of multiple choice question. It should not be like we are moving ahead, but we are leaving what you have studied in past. Then you will be struggling in your for preparation of exam. If you do simultaneously along with the class, it would make your life easy to crack all those exams.
Yes, sir.